This is the market outlook for this week. We're going to start off with some of the key fundamentals, macro fundamentals, and then move on to the technical side. So we're going to start off with the UK. What we have been seeing is that the pound has been affected heavily by whatever's going on with the Chancellor, the new Prime Minister, and things like that. So now the most important thing to watch out for going into this week or starting off this week is going to be the Chancellor's speech on Monday. What we saw, just a quick recap, was that the chancellor came in and she was promising a lot of things, talking about raising living standards, investing in industry and rebuilding public services and everything like that. But instead, what we have been seeing is that she is signaling tax rises, dialing down expectations of spending sprees. They suspended the road and hospital programs. And as you continue down into this article, it's detailed out a little bit more. So if you want, you can go back and kind of read that. But that's a quick summary of what we were essentially promised versus what we ended up getting. And so on Monday, she's going to be coming out and giving a speech, and that's going to be the first opportunity to temper the pessimism and lift the mood, the national mood. And this is going to give us some hints and clues, essentially, of what to expect in that new budget that's going to be coming out October 30th. So this is going to be very important when you're trading the pound in general. So on Monday, when the market opens up, when the UK market opens up, expect the market or the investors essentially to be placing trades as market sentiment leading up to the speech release. And then when the speech release does come out, expect some volatility in the markets around that time. Moving on to the yen, what we saw was that last week, let's continue down here. Last week, Bank of Japan maintained their interest rates. So we saw a couple of rate hikes. So we saw the first rate hike in March, and then we saw another one in July. And this month, they just maintained them. They said that they're not in a hurry to increase interest rates again after the rate hikes in March and July. And for that reason, we saw the yen weakening compared to a lot of the other currencies, specifically the US dollar. And so as we continue down, Bank of Japan said that they would continue to raise its benchmark interest rate if economic and inflation trends move in line with its outlook. So essentially, if we see that inflation is increasing or that it's coming out stronger than expected, then we may see potential more rate hikes to close out the year. So the sentiment here is that, the yen is kind of whiplashing because of, first of all, increasing interest rates after, decades for the first time in March. And then we saw another rate hike in July, maintaining it. And now can we see potential more rate hikes to end off the year? Coming on to the Fed is we saw that the Fed cut their interest rates by 50 basis points last week as well on Wednesday. So we were expecting a 25 basis point cut. We were expecting the Fed to come in a little bit more conservative and just cut it by 25 basis points instead of 50. They came in and kind of surprised a little bit. But in general, we saw also the US dollar having a whiplash effect, because when we saw that there was a 50 basis point cut, historically, we have seen that, the indices or the dollar or the currency in general, when the central bank does cut interest rates, tends to weaken a little bit. But you have to play that into the effect of how the economy is at the moment. So the rate cuts were essential because the central bank has two mandates, right? The first one is price stability, which is inflation. So maintaining inflation at a healthy level, which for a lot of central banks, the target is around 2%. And the second mandate is having a strong labor market. So making sure that unemployment isn't super high and things like that. So we were able to combat the first mandate, which was price stability, by increasing those interest rates up to that 5.5%. We started to see that inflation was starting to calm down, but then that was also impacting the second mandate, which is the employment. We start to see higher unemployment rates. We start to see that more people were moving on to unemployment claims and things like that. So when the rate cut did come out, the 50 basis points, that essentially gave the investors a little bit more hope that we might potentially see a soft landing instead of a hard recession. And so when that happened, and after the press conference came out and Powell kind of gave his speech and was also answering questions and things like that, we start to get the sentiment of, can we see more potential rate cuts to close out the year? So potentially another 50 basis points total, if we could potentially see that. And so now what we're going to do is pay a little bit more closer attention to economic data. That's what the Fed is going to be doing as well. So they're going to be watching out for PCE that's going to come out on Friday. We also have, prelim PMI data that's going to be coming out, consumer data, Powell speeches, and everything like that. So those are going to be some of the key fundamentals. That's pretty much what's happening around, this 50 basis point rate cut and the whiplash that we saw in the dollar, which also we saw being translated over to gold as well. A quick recap of last week, just economic data wise, because last week was pretty economic or fundamental heavy. We started off quite easy on Sunday and Monday with some bank holidays, so nothing high impact coming out. And then the week started off with CAD CPI coming out and core retail sales coming out from the US and retail sales as well. And then after that, continued down into pre-London session, we had CPI data coming out, PPI and RPI, so inflation from all three aspects, three major aspects of the economy, consumer side, maintaining at that 2.2. We started to see that inflation on the producer side is starting to reverse, which is a good thing, because that means that you're going to start to see all of this being translated over to RPI and eventually to the consumer side. So lesser price pressures on the retail side and the consumers, which is a good thing. Wednesday, we really started to see a lot more sentiment or market sentiment related trading and leading up to the fundamental release and things like that. So not too much of technical until after the news release, which was that 50 basis point rate cut. And then continued down, we had some GDP data coming out. We had unemployment rates coming out from Australia. And then on Thursday, we had GBP news coming out where Bank of England maintained their interest rates that did not cut. And essentially the sentiment there was that they were going to just continue holding on to this and just kind of watching the economic data as well, which is pretty much what every central bank has said, that they're going to continue watching the economic data, and specifically with consumer spending and also just consumer inflation. Then we had unemployment claims coming out from the US, which was better than expected. We were expecting, around the same amount of people to be filing unemployment claims for the first time, but we came out a little bit lower, which is a good thing. So this is the type of fundamentals that is going to support the Fed just maintaining interest rates for another month or so. But if we start to see that more people are getting onto unemployment claims, then we might start to see, another potential rate cut. Bank of Japan maintaining their interest rates. And then retail sales coming out from the UK, and then closing out the week with some more Canadian economic data. So this week, what we have is an easy start with some bank holiday coming out from Bank of Japan, and then things starting to pick up on Monday with the UK session. So you have the French flash manufacturing PMI coming out. I will most importantly be watching Germany's, because that's one of the bigger economies in the Eurozone. And then you have flash manufacturing PMI and services PMI coming out from the UK as well. So watch out for that. And then as we continue down, same thing for the US. So when you're in New York session, some prelim data coming out essentially here. And then if you're trading the Australian dollar pair, any pair, then you're going to be watching out for any for this news here specifically, and any market sentiment related trading leading up to this news release. So what that essentially means is that we're expecting that RBA is going to be maintaining the interest rates, and so if there's any sort of rate hike or rate cuts, expect the markets to react to that, of course. And then if you're trading the Japanese yen, so if you're trading GJ, EJ, or UJ, you're going to be watching out for this news here as well, with Bank of Japan's governor coming out, and kind of potentially you're looking for any hints or clues of where the economy might be headed. Going into Tuesday, we have consumer confidence coming out from the US, and then you also have some S&P data. So you have some low impact news essentially this week, a little bit trickled throughout the week, which is going to give you a good understanding of, what's the economic data like, what's the economic condition like, and that's going to lead you into some of the higher impact news coming out later in the week, starting Thursday, once again, with some more interest rates news coming out in the UK session, and then finally unemployment claims. So this is something that we're going to be watching very closely for the next few months of whatever's going to happen with unemployment claims. We're expecting some more people to hop onto unemployment claims, but if it comes out lower or it comes out closer to the 219, then that gives you a good outlook that we're going to maintain those interest rates and that the Fed is not too worried about the labor market. Powell's going to be speaking on Thursday as well, and some more FOMC members. So Thursday is going to be very heavy when you're trading US30, when you're trading any USD pair in general. And then on Friday, we have the core PCE price index also coming out, which the Fed is going to be watching out for. So overall, we do have some high impact news coming out this week, but we also have some lower impact news kind of trickled out. And I like to watch those as well, along with the high impact, because once you kind of put all these pieces together, you understand what's the economic health like and what to expect when you're trading specific pairs. We're going to hop on to the technical side now. So we're going to start off with US30. On the monthly, we're coming up and creating new highs. So that's going to be one important thing to kind of understand if you're trading US30, that as price continues to push up, we are essentially coming back and tapping into territories that price has never reached before, right? So there's a lot of risk on sentiment at the moment, but understand that even from a technical side, whether you're sitting at profit taking levels or not. So dropping down to the monthly time frame, this is where we're going to really start doing our analysis. I'm going to start looking at any specific levels that are very important. So for example, this was the previous high that price made. We came back and kind of tapped into that area, grabbed that liquidity on the monthly time frame and started to push back up and start to break previous highs. So last month we grabbed a lot of liquidity here as well and closed out at our own high. And this month we're sitting at our own high at the moment as well. There's 8 days until this month ends. So we do want to be a little bit more careful when we're looking for our opportunities. Dropping down to the weekly time frame, pretty much the same thing, where price was sitting at this level and struggling to break past it for a few weeks, and then finally this past week we broke above, left a little bit of a top wick. So what we want to see is, can price continue breaking past this and carrying that risk on sentiment from last week? But again, you're going to be watching the economic data for that. When we drop down to lower timeframes is really when you're going to start to see a little bit more clear picture, where when price did finally break past that, it came back and respected this area of support. And then a couple of days ago, we started to see a massive bullish momentum to the upside. And Friday, we closed out with a little bit of uncertainty, but also a lot of pressure kind of dying down from the buyer side. As you notice, the previous daily candle barely came up and filled the previous wick here. And then it came back, kind of corrected its own movement on the intraday time frame, and that's where we're closing out at the moment. So I'm going to wait until New York session for the PMI data to be trading US30. But if I drop down to some of the lower time frames on the 4-hour time frame, what I want to see is price breaking out of its own consolidation. So I'm going to remove this because I want to pay a little bit more closer attention to the levels that price needs to break right now. If price breaks below this, then I'm looking for a deeper corrective move to come back down into these levels right about here. So around that 41,800 level, this is kind of the movement that I'm looking for. It's still quite bullish. We're still in that quite bullish momentum to the upside. Any profit taking levels would be around 42,400 or a little bit higher than that. I do think we still have some more bullish momentum, and the US30 can carry us through that the next couple of days, leading up to some more of the US economic data that will be coming out. So as of right now, we're still maintaining that bullish trend even on the intraday time frame. So if price breaks below this, we're waiting for it to come back down, taking some partials around here, let it continue down, come back and correct into this movement, and then continue back up. The reason why I would like to see a deeper corrective move here is because this is a level that price has struggled to break past for a very long time. So this is kind of the area in general that price hung out in. And then finally, when it broke past that, we started to see that there was still some bullish momentum when you look at the candlesticks, where there was still a lot of bullish momentum. This one here, we barely even tested the sellers. And then the following candle, really, it broke the lows and then came back and closed up bullish. And then after that, we start to consolidate out. So the market's only going to collect orders in 2 ways, or even generate liquidity in 2 ways, consolidation or corrections. So we have been consolidating here. As you see, we continue to break our highs for the last 3-4 hour candles. So what I want to see is a little bit of a corrective move and then a continuation back up. And that's essentially going to give us enough momentum to continue its bullish momentum to the upside. Let's do NAS100. So same thing here where we are sitting at that monthly high, and I will adjust this level as I drop down to lower time frames as well when we start to see more cleaner price action. So that's kind of the area for the last couple of months that we're struggling to break past. The same thing here. This is kind of the range that I'm looking at until price can break past this. So because these are monthly time frame levels, these are also very strong. And so that's why we need to see clear break and retest prior to any continuation in one direction or another. You come onto the weekly time frame, you start to see that there is a clear bullish momentum here as well. And you are starting to see a little bit of an exhaustive move happening when it comes to the bullish momentum, where price is failing to break past this 19,950 area. So once we broke past it, we came back, retraced a little bit deeper corrective move. Pay attention to where price is coming back. So this entire area essentially here, where price is coming back and collecting some more liquidity. That's a liquidity grab right there, pushes you right back up, come back, and we're kind of just hanging into this area, right? And then push back up here once again, and we kind of failed to break past that. So as of right now, any buy opportunities would be above this 950 area, and then a continuation back up, revisit this previous high, or any sells would be below this and then come back down. So for NAS100, I would be kind of careful just this week, where I'm only taking scalp opportunities or day trade opportunities, not so much of swing trades just yet. Drop down to the daily, you start to see some exhaustive moves happening here as well, where the previous daily candle closed almost like a doji, but still bearish after rejecting that 950 area. So if price continues past this, then I'm looking for buys. If price comes back down below this, then those intraday trades would be when price breaks past this. Anything in between, I'm not looking for a trade, right? So if price kind of just hangs out, consolidates here, like it did for like these 2 days here, and then like same thing back here as well. I'm not looking for a trade. I'm just looking for cleaner moves in one direction or another. So on the 4 hour, you start to see a consolidation here. So this is not something that I would be trading. Let's go on to GJ. So for GJ on the monthly time frame, we've had price come up and break this previous high that I had been struggling to break past for many years. And then finally we came up, grabbed some nice liquidity from previous areas, from that 210 mark essentially, from these previous areas, and then we started a nice sell-off. Even with this monthly bottom wick rejection here, we came back and we tapped into these previous consolidation areas. So see how strong this level is, right? We grabbed that, we rejected all the sellers, came back up, and failed to break its own high. If I zoom in into the current monthly candle, we failed to continue breaking the previous monthly high and then continue back up bullish. We're kind of just hanging into this area. So if I were to mark off any levels, I'm going to mark off the current monthly high right here at 193,400. And then also right about into this area here specifically. And the reason why is because price rejected all of this, came back up, and that's kind of the area that we're hanging in at the moment here as well. When we drop down to lower time frames, I will adjust this level a bit more. So this is just that 190 psychological level. Come on to the weekly time frame. So here you start to consolidate it out. Finally, you break above, and then we start to consolidate out here a little bit, but still maintaining that bullish momentum. Finally, after consolidation, price gets enough momentum to continue to the upside, create its own new highs, pulls right back down, and that's kind of the area where there's that massive wick rejection, tapping into this previous multi-week consolidation zone, and then push right back up, respecting that 193,400, pull back down, and now we're starting to create new lows here. So as of right now, I'm not looking for any potential trade opportunities here for swing trades or anything like that. But if I'm looking for day trade opportunities or even quick scalps, what I'm looking for is price to break past this and come back and fill the previous weekly candle high, that wick right there. So that's a pretty good range in general, where you could look for some quick scalp opportunities, even day trade opportunities. And this could happen with the speech that's going to come out on Monday from the Chancellor in the UK. Drop down to the daily time frame, and we start to see that after holding on to a nice support into this area, we see a nice bullish momentum to the upside. So right about here. a nice bullish momentum to the upside. We come back and we're hanging into this multi-day consolidation level. So that's why I'm going to be a little bit more careful here, just looking for scalp or even day trades or anything like that as well. It's a pretty good range, right? It's a big range that you can trade, but still you want to make sure that you're not getting stuck in any wick outs or fake outs or anything like that. On the 4-hour time frame, we do start to see a little bit of more bullish momentum, but also some exhaustion happening here on the bullish momentum as well. So a massive bullish candle to the upside, and then the following bullish candle creates a new high and leaves all those buyers and sellers rejected, kind of closing in the midst of all this consolidation here to the left. And then the following one breaks the low, doesn't really fill the previous week or wick completely, kind of hanging out here, still closing bullish. And then the same thing here with the last bullish candle. We're still respecting this 900 area in general. So this is why we're going to be a little bit more careful, where I do want to see some more corrective moves. If I was looking for scalp opportunities within the zone, I would wait for price to completely break past this. That way you have a clean move here to the left to come back and revisit into that 190 area almost. And you can look for a deeper corrective move and then more buy opportunities to upside. Right now, we know that the yen is weak. That's how the market is pricing that in, with the Bank of Japan maintaining their interest rates. But of course, you want to be watching out for what happens with the flash manufacturing services PMI and all that sort of UK data that's going to be coming out as well. USD JPY. So same thing here with the US dollar, where the market is more on the risk on sentiment. With the yen, where the market is pricing in a weaker yen, with Bank of Japan maintaining the interest rates that it's at right now and not any more potential rate hikes as of right now, because they're following the economic data. So now on the monthly time frame, what we have is that current monthly bottom wick tapping into these previous areas. So notice how we reject that, and then price pulls back down a little bit deeper, and then this wick here respecting these previous highs right about here, and then grabs that liquidity, continues to the upside, and for about 3 months we have a nice bullish momentum before we tap into a new high, and then pulls right back down. And these candles come back and revisit the same exact area, respect it as support, and then we come back, revisit, see a corrective move coming back into this previous support, and then push back up. And that's really when we get that momentum to create new highs. And now what we're doing is coming back and revisiting the same areas and rejecting the sellers down here. So what I'm looking for based off of monthly time frame is, can we see another corrective move to the upside, potentially coming back and kind of revisiting some of these areas here where we have seen a lot of wick rejections and kind of supports being formed when you drop down to lower time frames, and correct that massive seller's pressure here to the downside. Come on to the weekly time frame, and we start to see that price is holding on to a nice support. So once again, you start to see more clear price action here as well, where price, as it broke above here, kind of started to exhaust out a little bit before one last push, and then you came back down and started to see that seller's pressure. We had a nice little break and retest, come back down a little bit deeper, collect some more liquidity, and then continue to bullish momentum to revisit the previous highs, and then give you a nice corrective move of that bullish momentum, and then create new highs here once again. And last week we had a nice bottom wick rejection, breaking previous lows, but also take a look at where price was also rejecting right into these areas, which is support, right? So previous weekly time frame support and resistance area. So of course that's a very strong level. And when you drop down to lower time frames, if you just keep that zone on there, you'll start to see a little bit more price action that paints a clearer picture. But last week we broke the previous high. So this week I want to see if we can create a little bit of a bottom wick and then flip back up and continue back up bullish. My first target would be closer to this area, which is another strong area of interest of liquidity, where you start to see that this is the weekly time frame here once again, where you start to see that there was some exhaustive moves generating some more liquidity as you're tapping into this area, getting that momentum for a little bit of more push before a corrective move. And then here, when you start to see a massive sell-off, we came back and respected that area as resistance and then push back down. So I want to see a deeper corrective move right here, and then a continuation back down into that 140,700 area if we are going to continue that bearish momentum. But as of right now, I am expecting to see somewhat of a bullish momentum and kind of just respecting this bullish structure here. So we are testing structure here at the moment. I'm not entertaining any longer term sells until we can break below this zone, and then we come back down deeper into some of these areas here. So right now, that's why I'm expecting a little bit of a bullish momentum to the upside. Come onto the daily time frame, and same thing where price pushed back up. We respect this area with this break and retest, and then this daily candle had kind of that whiplash, breaking the previous daily lows and breaking the previous daily highs as well. So that's what we're going to wait for the high here to be cleared out, and then you have that nice range here to take advantage of. Or else if price fails to break past that, we're looking for sells to come back down. And then on the 4-hour time frame, so some of the intraday time frames, same thing here. So this is a very important level that price has been respecting as support for a very long time, even in this downtrend. So if we break past that, if you break past this intraday bearish structure, then you have a bullish momentum to the upside to 148. And then coming on to gold, a massive bullish run up for the last, multiple quarterly candles here. And then also last quarterly candle barely tested any sellers, and this quarterly candle, same thing, a massive rally up. So we do want to be very careful here, as price could be tapping into potential profit taking levels. When you drop down to the monthly time frame, price was struggling to break past this level for a very long time. When we finally broke past it last year, we start to respect that area of support, and then after that it's been a massive bullish run up. So this is where we want to be extremely careful when we're looking for our trades. I would be entertaining more of scalps or day trades, not so much of swing trades, unless you're running for about 200 to 300 point trades here. And the reason why I say that is because that gives you enough room to take some partials and also do some scale in opportunities that are risk free. And so you're not also over leveraging yourself trying to take advantage of this massive bullish run up. On the weekly time frame, we start to see that there's better price action showing us some more bullish momentum to the upside. We do start to see some exhaustion here, some consolidation essentially. On the weekly time frame, right about here, we get a break and retest, and then price pushes back up. We don't have enough momentum to continue bullish. You start to see a corrective move, and then now starting to push back up here once again. So I would expect to see something similar as we're tapping into, let's say, 2650 or 2700 area, somewhere here closer to this level. Somewhat of a profit taking level to come back down a little bit deeper and see some corrective moves, and that's going to happen from that risk on sentiment from the dollar continuing. And then after that, can we see a continued bullish momentum to the upside, or come back down deeper into some of these areas of 2450 or 2400 flat? But I do expect price to be, or this level here to be, a profit taking level in general after a massive bullish run up. Drop down to the daily, and you start to see that price has been respecting this area support and then push back up here once again. But overall, we do see that there's still a bullish structure, because there are these new highs that are being formed, right? So higher highs are being formed even in that consolidation, still respecting that high. And finally, we break past that, create another high, and that's kind of where we're sitting at the moment. So I do want to see if price can pull back, tapping into 2650 or 2700, pull back a little bit deeper, and that would be a trade that I would be willing to take. Or if price breaks below this, then a deeper corrective move, essentially to come back into some of these previous areas of 2450 or 2400, and then a push back up on that bullish momentum. But right now we are on that risk on sentiment for the US dollar, so I do expect gold to reverse or correct a little bit. Come on to the 4-hour time frame. So after price, broke past that, respected this area support, we have massive wick rejections. And then we also saw that over here, the candles were starting to respect the previous highs. And then we got a nice rally up, and this candle here, a little bit of bottom wick, respecting and filling this entire bottom wick right here as well, closing at its own high. And then the last 4 hours barely tested any buyers, came back down and closed bearish. So I want to see if we can continue that momentum to the downside just to correct some of the intraday bullish continuation up or bullish run ups. So that's pretty much it for this week. Those are some of the pairs that we're watching out for in the group as well. And if you guys have any questions, feel free to reach out to me on Instagram at SharmaFX. Other than that, have a great trading week, everyone.